Let's discuss about how blockchain technology helps in finance. Blockchain technology is a revolutionary innovation that has the potential to transform the financial industry. At its core, blockchain is a distributed ledger that records transactions and information in a secure, transparent, and immutable manner. In the finance industry, blockchain technology has the potential to improve efficiency, reduce costs, enhance security, and enable new business models. One of the primary benefits of blockchain technology in finance is its ability to streamline processes and reduce costs. For example, blockchain-based smart contracts can automate many financial processes such as trade settlement, insurance claims, and compliance reporting, reducing the need for intermediaries and manual processes. This not only reduces costs but also improves accuracy and transparency, reducing the risk of errors and fraud. Another benefit of blockchain technology is its ability to enhance security. Blockchain technology uses cryptography to secure data, making it virtually impossible to tamper with or hack. This can improve security in a variety of financial applications, including payment processing, identity verification, and supply chain management. In addition, the decentralized nature of blockchain technology means that there is no single point of failure, making it more resilient to attacks and outages. Blockchain technology also has the potential to enable new business models in finance. For example, blockchain-based peer-to-peer lending platforms can connect borrowers and lenders directly, without the need for traditional financial intermediaries. This can reduce costs for borrowers and provide higher returns for lenders. Similarly, blockchain-based crowdfunding platforms can enable individuals and businesses to raise funds from a global audience, without the need for traditional financial institutions. One of the most well-known applications of blockchain technology in finance is cryptocurrency. Cryptocurrencies are digital assets that use blockchain technology to enable secure, peer-to-peer transactions without the need for traditional financial institutions. Bitcoin, the first and most well-known cryptocurrency, was created in 2009 and has since been joined by thousands of other cryptocurrencies. While cryptocurrencies have been subject to volatility and regulatory challenges, they have also generated significant interest and investment from both individuals and institutions. Blockchain technology also has the potential to improve financial inclusion by providing access to financial services for individuals and businesses that are currently underserved or excluded from the traditional financial system. For example, blockchain-based microlending platforms can provide small loans to individuals and businesses in developing countries where traditional banks may not be present or may have high fees and requirements. Similarly, blockchain-based remittance services can enable low-cost, cross-border payments for individuals who may not have access to traditional banking services. Despite its potential benefits, blockchain technology also faces several challenges in the finance industry. One challenge is regulatory uncertainty, as many regulators are still grappling with how to regulate blockchain-based financial applications. In addition, scalability and interoperability are still significant challenges for blockchain technology, as current blockchain platforms may not be able to handle the volume of transactions required for widespread adoption. Finally, there is still a lack of education and awareness about blockchain technology among the general public and financial industry professionals, which can limit adoption and investment. In conclusion, blockchain technology has the potential to transform the finance industry by improving efficiency, enhancing security, enabling new business models, and promoting financial inclusion. While there are still significant challenges to overcome, the potential benefits of blockchain technology are significant and warrant further exploration and investment. As the technology continues to evolve and mature, it will be interesting to see how it is adopted and integrated into the financial industry.